Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 7th. I'm Eric Wilkinson. Yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I do the same thing for you folks in these daily market commentaries, and I go a little bit further and talk about some option strategies I'm implementing into my portfolio based on those assumptions we come up with. Also, I go even a step further for you folks in my daily webinars, or my webinars actually, where I've gotten these courses created for specifically people that are wanting to learn about options. We've streamlined that process in order to find the right option strategy for any given assumption. And it doesn't mean that we're just saying for a bullish assumption, we're buying calls, bearish assumption, you buy puts. No, what we're doing is we're going in, digging into the internals of these underlying so that you understand how they work mechanically and then find the strategy that will be the most appropriate for that situation. All right, so without further ado, let's get on with the economic data, see how that's impacting the markets with some market analysis. Well, it is a Monday, and guess what? We do not have a whole lot of economic data. We did get in from Europe, German industrial production coming in at 3.2%, expected to be 1.8%. So really a nice beat on the street there. Also, a revision to last month's number by 1.3%. So it was expected. It came out as 1.6% and they revised it up to 2.3%. So a nice revision there as well. So good to see the German industrial sector is doing well. Here in the United States, we really didn't get anything. Consumer credit, but that's not a big deal. At least right now, we're going to expect that that number is probably not always going to be the best economic data point, with the consumer really going out there and spending money on credit cards because they don't have a job. That number doesn't come out until later on today. So sorry, Bob. Given that bit of a confusion, it's later on today that we'll keep our eyes up, afternoon for that. All right. Gold still up above the Fibonacci that we've been talking about at $45 really is the psychological level there that people are going to be keeping an eye on. We would like to see that dollar move further here to the downside, but with things like the German industrial production numbers pushing higher, that's going to lead people to believe that the demand for crude oil is starting to come back. Remember, the manufacturing sector is going to be one of the biggest drivers of demand for crude oil in the manufacturing process. I'm not just talking about the crude oil barrels. What we're doing is we're talking about the breaking down of that crude oil into its different byproducts like distillates, which really goes into the manufacturing sector there. So it's going to be hard to break crude oil. Gold making a big move today, up over $30 or up $30 right now on the day. You know, I covered I got into this trade a little bit early for the longs in gold. Pushed myself out as soon as we broke below this 200-day simple moving average. I expected it to find a little bit more of a support area around there. Only spent 2 days down there really before rallying back up, but it was enough to get me out of this trade on the longs in gold and my GDX, which never really started selling off like gold did, but I'm out of both of those trades. But seeing gold bugs come in force because they are expecting another round of stimulus rather sooner than later. All right, bonds are moving higher today, almost by a point, but one thing to note is we are getting back above the 50 Fibonacci, and after breaking down below there on Friday, you know, we found a couple of support days here on Wednesday, Thursday, found some nice support there. Friday just fell out of bed, just really tried to put the pinch on people, but we're making a move now back into this area, whereas the value area, point of control kind of thing. It's more of the value area really, because we got two separate points of control here. But I do expect this one to migrate back up into that 177 area. So we've got about 5 points away from that. But I do firmly believe that we are going to slowly migrate to the upside there. I think that the risk is to the upside in bonds, or interest rates to the downside here. VIX is moving a little bit higher. We've got the Dow Jones Industrial Average off by 150. That would expect or make one believe that we are going to see some VIX spiking, right? We're at these all-time highs. People are going to be wanting to put on protection on their portfolio. That usually entails buying puts. That's not exactly what we teach here at Pro Trader Strategies, but that's generally speaking what most people out there that are trading options go out and do, and that starts driving volatility higher. Now, something to note with this high here, that happened in the overnight session. So that isn't really a clean number there to start like setting up charts around or really kind of tout that that is a new all-time high because it happened overnight. We need that happening when the actual underlyings inside of the index are creating those highs, okay? If the stocks aren't trading and it's just based on the future, well, those stocks never really traded there, and the idea is then the Dow Jones or these other indices have not really traded there either. So something to keep an eye on as a chartist that wants to get printed during the day session anytime we have that happen. Now, if we go over to the Nasdaq, this actually was an intraday print. This happened after the open, and as you can see, we are very near the highs of the day in the Nasdaq as it continues to push higher here. Most of the tech stocks are doing very well today. There's a lot of stocks out there making all-time highs, but you can see the Nasdaq is one of the few indices that are in positive territory. Again, E-mini S&Ps 3705 was printed in the overnight session right after the close of Friday's session. I think it printed there and then tried to get there overnight last night. Came up just a little bit shy, but again, it doesn't matter how many times we print those overnight highs. It doesn't really count because the stocks are really what should be driving that rather than just the futures there. So we're seeing a little bit of weakness in the mini S&Ps, and you can see the overnight session printed the high there of 3705. So again, during the day session, we might try to get up there to print that number. That's going to be a target at least for the next week or so. It's going to remain a target until it gets printed during the day session, but it doesn't always mean that we're going to do it the next day. So we're just going to have to keep an eye on that stuff to see how we start shaking out today. It's really going to be news driven throughout the day just because we don't have a whole lot of economic data or any of the Fed governors really talking. So it's really going to be news driven for the most part. Now, Tesla, I just wanted to talk about this because they're talking about, space travel and stuff like that. And Tesla is very deeply involved in that, especially because they own a space company, really. So they're really driving higher here. Also, Blue Ocean is the Bezos's space travel sector, and everybody's kind of talking about that today. It's given these guys a bit of a boost, but you can see Tesla all-time highs. And I was looking at Nike because all I heard about, I think for the past 2 weeks from every kid out there on the street is the Air Force One Nikes. Everybody's got to have them, and everybody's talking about it. So that's really driving Nike higher. Some of these Air Force Ones, the limited edition ones, are astronomical prices. Boys getting into shoes as well. It's not always just a girl thing anymore. Shoes are the new thing across the board, it seems. But Nike making a new all-time high here. I have no positions in either one of those. The one thing that I do have, and it is something that I'm looking to cover. If you guys remember, I have on PENN Gaming as a long stock in my IRA, and I've been doing covered calls against that. And I am short the December 90 calls in there. So quite a bit higher, obviously $15 almost higher than the all-time high that PENN has seen. So it's not really in jeopardy at this point of getting called away from me, but I have done this consistently and lowered my overall cost basis on this specific trade. It's got to be below $2 at this point. I don't have the exact data right now, but with that being said, those D's 90 calls that I sold for $1 are right now trading 22 cents with 11 days to go. That will overall lower my overall cost basis on this trade of where I paid it for $4.49 by another $1. I think my break even on this trade right now is $3 because I've lowered the cost basis by at least $1.50 before this trade here. That would make it another $1. So lowering the overall cost basis, looking to try and get PENN for free by selling these covered calls in this trade. Lowering that basis would be a nice, huge pat on the shoulder, for lack of a better vanity metric, really. All right. So those are the kind of things that I'm keeping an eye on today. I haven't added anything to my portfolio, just kind of keeping a watchful eye on my portfolio and looking for opportunities. Always, if you guys have opportunities out there that you're kind of looking at, you want to run it by me, throw a comment in the bottom of one of these videos. I'm going to respond to everybody. Or if you have any questions on different option strategies, I'd be happy to go back and forth with you a little bit there. And that's about it, other than we do need to talk about there are risks involved in trading. So please take a moment to go over this disclaimer, as we are an educational company. And that's about it. Other than, if you can't take that, take it easy.